My name is Tanner Harwell, and this is my industry and company research. Overview. So first, our industry focus. We'll take an in-depth look at the investment advisory industry, how it works, who the major players are, and the trends driving change. Secondly, we'll look at our analytical framework. We'll use a SWOT analysis to highlight the industry's strengths, weaknesses, opportunities, and threats. And then we'll use Porter's 5 forces to help us understand competitive rivalry, supplier and buyer power, the risk of substitutes, and barriers to new entrants. Third, our company case study, Fidelity. We will explore Fidelity's size and growth patterns, its strategic direction and product services, and finally its culture, reputation, history, and financial performance. We will then tie this in back to the competitive profile to the broader industry highlights. Finally, we'll look at real-world perspectives. We'll bring in first-hand insights from 2 industry leaders, Brian Goldman, who shares his views on strategic leadership, and Ryan McCulley, who offers a ground-level look at daily operational challenges and success tips. Together, these elements will give us a complete picture of what it takes to thrive in the investment advisory industry. Industry research. So here, we're going to be looking at the core of the investment advisory world and its leading firms. First, who investment advisors are. These are professionals who guide clients' investments and earn fees based directly off their client success. They're incentivized to make smart decisions because their compensation grows when their client portfolios do. With the client's approval, they can also act on their behalf, placing trades or reallocating their assets so the clients spend less time managing the details and more time focusing on their goals. Next, there is the major companies. So first, there is the Vanguard Group, which is the #1 ETF provider. It stands out with its unique investor-owned structure, meaning that its firm is owned by its fund's shareholders. Next, BlackRock Inc., who holds the title of the world's largest asset manager, overseeing trillions of dollars in assets. After that, Charles Schwab. It is a full-service firm that emphasizes low-cost products and a straightforward trading experience. And finally, Fidelity Investments, who brings in trillions of dollars in assets and a reputation for their brokerage and retirement planning and their industry-leading technology. Industry research continued. These are going to be the industry trends that are shaping the investment advisory industry today. First, digital transformation. Firms are using AI-driven portfolios, advanced risk analyses, and trends to forecast and deliver smarter, more personalized advice. Secondly, the regulatory changes that are going on. They're putting in stricter investor protection rules. So this is where firms are investing heavily in compliance technology to ensure transparency and trust. Third, fee compression. The industry is shifting from commission-based to fee-based models and even subscription services. This is to meet the client's demand for predictable, aligned pricing. Fourth, demographic shifts. Millennials and Gen Z expect the mobile apps with clear fee structures and a user-friendly experience, pushing firms to modernize their platforms. Now for the SWOT analysis. Strengths. There's a booming demand for wealth management and increasingly sophisticated digital platforms. For weaknesses, there is heavy regulatory burdens and a reliance on legacy models and that can slow innovation. Next, opportunities. There is the opportunity of expansion into emerging markets and the rise of robo-advisors that open up new growth avenues. With that, the robo-advisors can also be a threat, as well as competition because of the competition from their low cost, and also the impact of the current economic state and the downturns challenge these firms' profitability. Together, these insights show where firms must adapt to stay competitive today. Industry research continued again. So now let's look at Porter's 5 forces. First, supplier power. Advisory firms rely heavily on expensive data providers and technology platforms. This gives those suppliers significant leverage over their cost and service terms. Next, buyer power. Investors have more options than ever. They have robo-advisors, self-directed platforms, and a demand for personalized service. This shifts the bargaining power to the clients and with demand customization and low fees. Third, competitive rivalry. So the market is very, very competitive right now. Price wars are common. The large firms are even buying out these smaller companies to expand their reach and capabilities. And fourth, there is the threat of substitution. There's a lot of do-it-yourself platforms coming up, like Robinhood, and alternative investments such as crypto and hedge funds that can lure clients away from these traditional advisors. Finally, there is the threat of new entry. So high capital requirements and a lot of regulation put on these firms create barriers, but a lot of these fintech or financial technology startups are innovating with AI and digital tools to break into the space. So together, these forces shape how the advisory firms must strategize for their long-term success. Fidelity Investments overview. So founded in 1946 and based in Boston, Fidelity remains a privately held company driven by its mission to strengthen clients' financial well-being. Today, Fidelity's global footprint spans 11 countries and over 200 branches across the U.S. and its workforce of over more than 77,000 professionals and serves 43 million clients. Most impressively, Fidelity manages $14.1 trillion in assets. So Fidelity Investments strategy. For direction and innovation, they're rolling out user-friendly digital tools like the Fidelity Youth app and Women Talk Money to reach these new audiences and improve the client experience. Core products and services. So they cover the full range, investment and asset management, retirement planning, wealth management, plus they have brokerage, trading platforms, and a digital assets team. For the competitive landscape, against their rivals like Vanguard, BlackRock, and Schwab, Fidelity stands out with its private ownership, letting them kind of plan more long-term and have a strong focus on their technological innovation. Finally, let's cover their culture, history, and financials. So Fidelity is trusted for its strong FINRA insurance coverage and its focus on long-term client relationships. For over 75 years, Fidelity has grown steadily as a privately held firm, allowing it to make decisions in the long view. And for their key financials, like I said, they have $15.1 trillion in assets, and they generate a steady revenue from management fees and advisory services. So this is my first interview. This is with Brian Goldman. He's the Senior VP at EA Resig. So he started actually as an investment banker, and now he leads corporate strategy, finances, and growth at his company. So his day-to-day kind of involves a lot of planning, project development, and working with multiple different departments to kind of make their goals happen. For highlights and challenges, he enjoys shaping the company's future and seeing team impact, and finds that managing the stress of high-stakes decision is the hardest. for leadership journey and advice. He transitioned into a leadership role to make a bigger impact and advises gaining a broad experience, learning to manage people, and stay flexible. Next, Ryan McCulley. He's the general manager at Crunch Fitness. So Ryan runs the day-to-day gym operations, leads his team, he handles finances and marketing, and plans for growth. So what he finds challenging and what he enjoys, so he enjoys the variety of each day, leading his teams and helping his members succeed, but managing tough customer issues and those kind of tough customers he does not like. He finds that to be hard. So for the key decisions that he makes calls on staffing, customer service, pricing, and resource allocation. His advice for future managers: have a genuine passion for fitness and customer service, build multitasking skills, and start in entry-level roles and kind of work your way up into these positions to kind of get to know the ins and outs of the industry. So in conclusion, this project brought these three main areas of research. First, our industry research, where I used the SWOT and Porter's 5 Forces to explore the investment advisory landscape on a macro term, looking at the trends, competitive challenges, and how the market operates. Second, our company research that was focused on Fidelity Investments, examining its scale in the market, innovation, services, and what makes it a top player. Finally, I conducted the informational interviews with Brian Goldman, who shared his insights on leadership and strategy at the senior VP level, and then Ryan McCulley, who offered a view on the more hands-on operations and team management. So the overall takeaway is that understanding the market forces, company dynamics, and real-world leadership experiences is essential for thriving in the investment advisory field.